Hi guys, welcome to another video from Little Too Simple. Carl Icahn is one of the most successful investors of our time, with a net worth of over $20 billion. He's known for his aggressive tactics and his uncanny ability to turn around struggling companies, which has led to some incredible successes over the years. His unique approach to investing involves taking large positions in undervalued or distressed companies and pushing for change from management in order to create value for himself and his investors. In this video, we'll take a closer look at Carl Icahn's out-of-the-box investing strategy and how he's been able to achieve such remarkable results. Carl Icahn is a billionaire investor and activist shareholder who has been in the game for over 5 decades. He started his career as a stockbroker in the 1960s and eventually founded his own investment firm, Icahn Enterprises, in 1987. Over the years, he's become famous for his aggressive investing style and his ability to turn struggling companies around. Icahn's investment approach typically involves taking large positions in companies and pushing for change from management to unlock shareholder value. He has built a reputation as a savvy investor with a keen eye for undervalued assets. Carl Icahn's out-of-the-box investing strategy involves looking beyond traditional investments and finding unique opportunities. He is known for taking large positions in companies and often assumes an active role in their management. Icahn isn't afraid to challenge leadership or push for change if he believes it will benefit the company and its shareholders. One key aspect of his strategy is his focus on undervalued or distressed assets. He believes the best opportunities often lie in companies that are overlooked or misunderstood by the market. He also looks for businesses with strong fundamentals, solid cash flow, a healthy balance sheet, and a competitive advantage. Once Icahn identifies a potential investment, he dives deep into the company's financials and operations, looking for ways to improve performance and create value. This could involve cutting costs, restructuring the business, or selling off assets. He may also push for changes in management or the board of directors if he believes leadership is holding the company back. Icahn often takes an active role in the companies he invests in, sometimes taking a seat on the board, or even becoming CEO or chairman. He uses this influence to drive change and create shareholder value. Overall, his out-of-the-box investing strategy focuses on identifying undervalued or distressed assets and then improving performance through strategic and managerial changes. This hands-on approach has allowed Icahn to generate massive returns for himself and his investors. So, why does Carl Icahn use such an unconventional strategy? Because he believes that traditional investments are often overvalued, while the best opportunities lie in undervalued or distressed assets. He has an extraordinary ability to spot companies that are undervalued and turn them around. Icahn is also not afraid to take on mismanaged companies and shake things up if necessary. There are several key principles that define Carl Icahn's investing philosophy. 1. Do your own research. Icahn believes in conducting deep research and analysis to identify undervalued or overlooked opportunities. 2. Be an active investor. Instead of being a passive shareholder, use your influence to push for positive change. 3. Take a contrarian approach. Go against the crowd. Icahn often invests in companies that others have given up on, finding value where the market doesn't see it. Icahn's out-of-the-box strategy has produced some legendary successes over the years. TWA, Trans World Airlines. One of his most famous investments was in this struggling airline during the 1980s. Icahn took over, cut costs, restructured operations, and eventually sold it for a massive profit. According to Forbes, Icahn made a profit of $469 million on the sale of TWA. Netflix. More recently, Icahn invested in Netflix when its stock was trading at just $58 per share. He saw the potential early on and held on as the company grew dramatically. When the stock soared to over $500 per share, Icahn made an estimated $1 billion profit, according to CNBC. Apple. Icahn also famously pushed Apple to increase its share buyback program, which helped unlock further shareholder value. Federal Mogul. He was instrumental in the turnaround of this auto parts manufacturer, further showcasing his ability to revive distressed businesses. Icahn has also been involved in several high-profile takeover battles, including his unsuccessful attempt to acquire Clorox in 2011. While Icahn's strategy has produced incredible returns, it's not without risks. Investing in distressed or undervalued companies can be highly risky, and it's crucial to do your own research before making any moves. Icahn's approach, pushing for management changes, can also lead to conflicts, lawsuits, and volatility. For individual investors, however, there are still valuable lessons to learn. 1. Look for undervalued assets. Companies that the market overlooks may have hidden potential. 2. Be proactive, don't just buy and hold. Stay engaged. Participate in shareholder meetings or communicate with management to influence positive change. 3. Think long-term. Creating real value takes time, effort, and conviction. That said, out-of-the-box investing isn't for everyone. If you're a conservative investor who prefers safer, traditional investments, Icahn's high-risk strategy may not suit you. It requires a strong tolerance for risk, out-of-the-box thinking, and a lot of time and effort. But for those willing to put in the work, Icahn's approach can potentially lead to significant returns and long-term value creation. If you'd like to learn more about Carl Icahn and his investing strategy, here are some great resources. The Outsider, My Life in Intrigue, Icahn's own book, offering insights into his life and investment philosophy. Various interviews and features on Icahn in financial publications like Forbes, CNBC, and Bloomberg. Books and articles analyzing Icahn's wins, failures, and the lessons investors can draw from them. So, what do you think of Carl Icahn's out-of-the-box investing strategy? Would you ever try a similar approach? Let me know your thoughts in the comments below. And don't forget to like, share, and subscribe for more content like this.